Today we're going to go over another 5-minute scalping strategy. So for this strategy, we're going to use two indicators. First indicator will be the MACD, moving average convergence divergence. Second indicator will be the EMA, moving average exponential. So let's go to the settings of the MACD. We're going to leave everything as it is. We're going to go to the style setting. We're going to turn off the MACD line and the signal line. And then we're going to go to the settings of the EMA. And we're going to change the color to black or whichever color you prefer, thickness on the lowest level, and a period of 5. So your 5-period EMA here, MACD down here. Then what we're going to do in the MACD is we're going to draw two horizontal lines, one at plus 10 and one at negative 10. This one's actually at negative 11, so let's just move this to negative 10 right there. I have these two blue lines. So how this strategy works, this strategy actually works on the 1 or the 5-minute time frame. I actually recommend you use it on the 5-minute time frame. It gives better signals. It's a little bit slower. Again, the strategy, I would use it in a trending market where you have volume, not in the sideways consolidation market, though it can be used there with a little bit of practice. So for a short position, how you would look is like this right here. So you would look for your histogram to be above the plus 10 line right here. So as you see the histogram is way above this blue line. And then where you would enter a position is on the first red tick after the green ticks have been above that plus 10 line. So first red tick on the MACD, then a candle close just below this 5-period EMA, which happened right here. So you would enter, you're going to keep your stop loss just at the last high, and you're going to target at a 1 to 1.5 risk to reward. So if you would have traded this all the way down to the end of that wick, you can see it would have been much more than a 1 to 1.5 risk to reward. So that would be a short position. So then on a long position, you look for the opposite. You look for the histogram bars to be below the minus 10 line, and then you enter your position on the first green tick of the MACD and the first candle close above that 5-period EMA. So that happens right here. There's your candle close, and you're going to target a 1 to 1.5 risk to reward. Keep that stop loss just below that last little low there. And again, if you would have taken profits right here, as you can see, that would have been a 1 to 3 risk to reward. Here's another long position. So you had the MACD. So the further the histogram bars are from the plus 10 or minus line, that's what I like to enter the trade, not if they're just touching the lines, like such as this right here. See how the MACD was just touching that negative 10 line, and then you had a green tick. I wouldn't enter there. I mean, you can enter that, but it's added risk to do so. So again, here's another short position. Histogram bar is above that plus 10 line. Then there's your first red tick on the MACD. There's your candle close. You see the MACD did turn green again, but you could have entered right here. Stop loss just there. This still would have been a profitable trade. This would be essentially a false signal. You would have got stopped out here if you would have entered. There's your lines. You would have entered on this candle close. You would have kept your stop loss right here, and you would have been stopped out right here before you got to your take profit. If you go again, this would have been, because you're kind of sideways here, I wouldn't enter here, but here you could have entered. Here's another short position. Histogram bar is very far away from that plus 10 line. There's your first red tick on your MACD. There's your candle closed, very indecisive candle, but then you would have rode this down to that wick again. That would have been a big risk to reward ratio. You could enter. Here's another short position. Histogram bar is fairly far away from that plus 10 line. There is your first red tick on your MACD, so you would have entered on this candle right here. Doesn't matter if the candle closes red or green, just in a long position, it needs to close above that 5-period EMA, and on a short position, it needs to close below that 5-period EMA. Red or green, doesn't essentially matter. My candles are just colored differently, so the purple candles are green, the white candles are red. And as you can see here, If you would have entered here on this first tick, this would have been a profitable trade. And then again here you would have tried to enter, but you would have been stopped out because there was no real way to put a stop loss on the low because there hadn't been a low formed yet. Just get rid of this so we can focus on this. Here would have been another short position. There's your first red tick on your MACD after there's your candle close right here. Stop loss just right there. And you would have wrote her down to about here for 2 risk to reward ratio. Let's see if we can find, so we're at the end of that month, but here would have been another long position. Histogram bars below that -10 line. There's your first candle close on your MACD in correlation, and then you would ride it up. Stop loss just below the low. Again, that's a 2 risk to reward ratio. So let's just go back here, way back, way ahead. Here again, these bars weren't very far from the MACD, but you could have entered that position. You could have entered here as well. Histogram bars below that -10. You would have entered right here on the first tick with the candle close, which closed right here. Stop loss just below the low. Targeting a 1 to 1.5 risk to reward ratio. There's your histogram bars below the -10. Again, they're not very far below there, but you can enter this position. There's the first green tick. There's where your candle would have closed. Right here, stop loss just below. And you would have, again, been in a profitable trade. All this is just a momentum trading strategy. Again, this would have been a huge risk to reward. MACD was below -10 line. First green tick, you would have entered right here. You rode this all the way up for almost a 4 risk to reward ratio. Again, same thing here. Histogram bars below the -10. Enter on your first close above that. Even here you could have entered. So you had your histogram bars there. There's your first green tick. There's your first candle. This would have given you as well a 1.5 risk to reward ratio. Here's a short position. Had the histogram bars above the +10 line. First candle closes with the red tick, so you would have entered right here. That's the wrong position. There we go. You would have entered right here. And if you would have rode it all the way down to the bottom of that candle, you would have had, again, a 2 risk to reward. So this is just a small little scalping strategy. Again, histogram bars above the +10 line. First red tick on the MACD would have been right here. Candle would have just closed, would have closed right on that. So you would have entered on this tick right here because candle did close below it right there. Stop loss just again above that, and that's giving you a 1.3 risk to reward ratio. And again here, histogram bars below the -10 line. Here's your first close above, and stop loss just below. Several positions, very easy to implement and use. Again, histogram bars below -10. You would have entered right here on this candle close. This would have been a losing trade possibly. No, it would not have. You would have rode profits right to there. Again, for a 1 risk to reward ratio. Here's another short position. Right there, histogram bars above plus 10. First red tick on the MACD, first candle closes right here. Stop loss just above there. This would have been very good risk to reward of 2.5. Here's another short position. You could have entered. See here, you would have been stopped out if you entered on that tick, because you would have entered here. Stop loss would have been here, and your stop loss would have been touched just as it came up there. There's another short position right here though. Histogram bar is just above that plus 10 line. There's your first red tick on your MACD. There's your first candle close. Stop loss here, and ride it down. Like and subscribe to our YouTube channel. Join our Discord server.